Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Juana.
Okay, we are going to do an update to the Las Vegas real estate market. This is our mid-April. We try to do these every week. So we're just going to jump right in and start hitting numbers and talk about why the Las Vegas real estate market, probably the hottest market in the U.S. I keep hearing people say, oh, but where I am, prices are falling. Okay, well, they're not here. Matter of fact, we actually had somebody come on in the comments and say, I've been following the Vegas market for a year and I've noticed prices are dropping. And I'm like, okay, we'll show you the data. This is what's actually happening. Okay, we're going to start with this little market action index over here on the left side of the screen. Now, it's 49. 49. It hasn't been 49 in 2 years. That's a pretty high number. Remember, anything north of 30 is a seller's market. I'm going to read what it says here. It says home sales continue to outstrip supply, and the market action index has been moving higher for several weeks. This is a seller's market, so watch for upward pricing pressure in the near future if this trend continues. Juana, what's a seller's market? What does that mean?
It means that there are more buyers than there are sellers. It means that there are fewer homes than we have buyers. It means that buyers are having a hard time getting the home of their choice or getting a home at all. It means that there are multiple offers, not in every case, but there are multiple offers. It means that there are fewer sellers than usual needing to reduce prices. Does that about cover it?
I think that's it. Basically, sellers have the upper hand still. We're going to go through some of the numbers here to explain why that is the case. We'll start with per square foot. Price per square foot, it was $260 December 29th. Now, if you watch these every week, these numbers keep rolling. This was actually at like $248 maybe 6 months ago. It's up substantially. It's at $274. Basically, if you had a 2,000 square foot house, it's worth $30,000 to $40,000 more than it was 6 months ago.
Okay.
Which isn't bad.
Not bad.
A lot of people were like, oh, like laughing at them. Oh, you're dumb buying now because your mortgage is $500 more than I can pay rent. We're going to show you that too. We have some rent data to show you. But it turns out paying a couple $100 more in rent has put $40,000 of equity.
A couple $100 more in mortgage payment, not rent.
Oh yeah, a couple $100 more in mortgage payment. It's paid off. I think it was a smart decision. Okay. So 274 is the number right now. That's pretty high. I've got a really good chart later to show you there. Okay, median list price was $539 in December. It's $589. It's 50 grand more. What does that mean? And this thing is going up. This thing is trending up. Why is median list price trending up?
Well, because prices are trending up. I mean, let's face that.
Is this a leading or lagging it number?
It's a leading number. And the thing to keep in mind is that the pace at which home prices are increasing is outstripping people's ability to save. So that means that if you're thinking, well, I just need to save more money, most people can't save at the rate that home prices are going up.
Yeah, that's true. It's almost like if you say, hey, I'm putting $500 away every month so I can get to 20% down, you'll literally never get to 20% down, right?
Right, because homes are going up by more than $500 a month.
Right. You're almost never going to, you're never going to get there. Here's another interesting thing. If we jump all the way down to median rent, in February, the median rent was $2,200 a month. It's $2,328. That's a huge jump in rents.
That's a huge jump in rents. Yes, absolutely.
You are seeing this. You manage a bunch of rentals, own a bunch of rentals. You just had another one of these 0 day. It's going right from one tenant to another.
Literally. I mean, the tenant is moving out at 9 a.m. and the new tenant is doing the walkthrough at 10 a.m.
So it's only not rented for an hour, right?
Well, it is rented technically because the old tenant is paying rent for the day and the new tenant is paying rent starting with the next day.
Okay, so it's technically rented the whole time.
Yeah.
Okay. But that's not just that one house. I mean, we're pretty much seeing everything. You just put another rental in, and I think you got like numerous parties on day one all want to rent it.
Right. I mean, nothing is really staying on the market for very long. And the thing is, I mean, look, if we were asking way above market value, then yes, we'd be sitting on the market. If the properties were not attractive, then yes, we'd be sitting on the market. If the properties were not in a desirable area, yes, we'd be sitting on the market. But we are priced at market value. These properties are in desirable areas. They look super nice. You know, they've got fresh paint, new flooring, nice appliances. So yeah, they're, you know, anybody who walks in goes, wow, you know, where do I sign? And that's what we're doing. You know, you have to keep in mind that if you're saying, well, rentals in my neighborhood aren't renting, well, you know, do they check those three boxes as far as market value, desirability of the property, and desirability of the area? If they check the three boxes, then the property should rent. And it's the same thing with homes for sale. If they check those three boxes, again, market value, desirability of the area, and condition of the property, then those homes sell pretty quickly too.
The data on vacant rentals is they are the least amount of vacant rentals that we've ever had. It's the lowest number. It's like 0.9%,
right?
Which is normal. It's normal to have some vacant rentals because people move out, and it doesn't always instantly rent the next day,
right?
You know, so okay. Here's a chart of the Market Action Index. Now the diamond is the same day for the past years, and as you look back, this is the hottest it's been since 2022. Now remember those two humps right in the middle where the Market Action Index got really hot. Remember, we still had like 3% interest rates. Interest rates hadn't gone up. So what you're seeing here is interest rates are much higher. But what's really interesting is if you go all the way back to 2019, 2020, we have a hotter market than we had then with double the interest rates. Interest rates are twice as much as they were. Why do you think that is?
Why do I think interest rates are twice as much?
No, why do you think that the market is hotter? Because there's people out there that believe the house is only worth the payment. And if the interest rates go up, the home prices tilt down instantly, like, oh, it's worth less. And if for like a teeter-totter, and if interest rates went to zero, prices would be $2 million because I could, you know, $2,000 a month payment. I could borrow $2 million.
No. So look, the reason that prices are up, regardless of the interest rates, is because we have a very low inventory level. We have a lot of demand, and we also have a lot of pent-up demand. So these are not just the people that are currently out there looking. These are the people that are on the sidelines and, if you will, looking from the shadows, not actually going out and looking at homes, not actually applying for a mortgage, but looking from the shadows. And they're looking to see when something is going to break as far as maybe homes in a particular neighborhood, or maybe interest rates, or whatever it is that has to happen for them to want to get serious and actually go out there and start looking at homes. 36 million millennials and Gen Zs who are the highest paid, highest earning generations ever for where they are in their life, have said they want to buy a house in the next 2 years. Now, 36 million of them have said this. There are not 36 million homes that will be transacted in the next 2 years. No, and you know what's interesting about these generations is that they're much more disciplined, I think, than previous generations, because as I'm looking at them, they have better credit scores, they're a little more financially literate, and I think these are people that are really to be taken seriously as far as their desire to buy. And I think that they have an outsized ability to buy. Now, the question is, will the inventory be there for them to purchase? And the answer is no. I mean, plainly, no. We're not building enough, and not enough resale homes are coming on the market. Even when resale homes come on the market, if people are trading one for the other, then it's a zero-sum game. So it's not like, you know, there are new homes when resale homes come on the market, because if somebody is selling their existing home, they're going out and purchasing another one. So they're trading one for the other.
What's interesting is there are more millennials than boomers.
Yes.
So this idea that, the boomers, well, first of all, it's going to take 40 years for the boomers to all die. Mm-hmm. Most of those homes their kids will inherit. They're not just going to magically appear in the market in the next 6 years, like some people have theorized. It's the silver wave. It's not going to happen. Here's a price per square foot chart. Anyone who says, I've been tracking the real estate market in Las Vegas and I've been looking at prices that have been falling, stop watching the Crash Bros. They literally make stuff. We've watched their videos, and we're just like, It's fake. Like you're literally making this up. None of this exists. Shows you this is the whole market, the aggregate of the whole market price per square foot. We've got a couple other cool charts here to show you.
Well, to me, the Crash Bros are kind of like reality TV. It's not real.
It's not real. This is a funny story, but we got asked back when we first started doing our videos, 2008, 9, 10. We actually had one of the channels came out and he met with me in the office and he goes, "Hey, we want to do a episode with you." And, and I was like, okay. I mean, remember we had like 500 or 600 listings at the time. So I'm not really too sure I want to like pivot over to TV, which I know I'm not going to make much money in. Like really, those guys don't make money. And he immediately started telling me how it worked. Well, it's not real reality. We have to actually, it's all scripted and we're basically going to take a scenario that happened and recreate it. I go, "What do you mean recreate it?" He said, "Well, we're going to find somebody who went through a transaction where these things happened. And then we're going to go back and get those people. We're going to act like we're reliving it." So remember, when you're watching these shows, this is not happening in real time. They're pretending to go through a thing that they went through in the past. It's not real for at least the real estate ones. Okay. Completely not real. Another one was we hosted a House Hunters episode at one of our businesses. And I was asking the people, because they were talking about which one of the three houses they were going to buy, the high rise or the one in the Gulf. This was here in Vegas. And I said, "Hey, I hear you talking about these houses you're going to buy. Like, which one do you think you're going to buy?" They go, "Oh, we bought this one last year. We're living in it." And I go, "What do you mean you already bought it?" They go, "Oh, yeah. Well, this is all, we're pretending it was like a year and a half ago." And it was like a mom, a dad, and like two teenage kids, the older teenagers. Remember that? I think you were there when they were telling me that. And I was like, this is crazy. So it's all made up. They're not really sitting there going, "Oh, should we buy the high rise or should we buy the country club one?" Ridiculous. Okay. Price per square foot, they're going to keep going up. Inventory. Here's the chart. Wanda, this is, if you look at the little diamonds, you can see that this is about the time when time of year inventory starts to go up. Except for last year, it was still falling. That was a bit unusual, right? Inventory this time of year fell. It's kept falling. We probably did not expect this, especially with 7% interest rates. The theory was people would sell, but there would be nobody to buy. Let's talk about some things that are happening in Vegas. We have 5,000 to 7,000 people a month moving here. We're not building 5,000 to 7,000 new homes a month.
Nope, but we are building a new movie studio.
We're building new movie studio is going in like 2 miles that way. A couple miles over there.
We're doing that. We're imploding the Tropicana and building a baseball stadium.
Okay.
We're
future jobs.
Right. We are anxiously awaiting a major league basketball team.
We're getting a team.
Yeah.
There's a rumor that LeBron James is going to be an owner. There's also a rumor that if we don't get an expansion team, the Lakers will come here.
All kinds of cool.
I think I don't think Lakers will leave in LA. But I think, because remember, Lakers didn't start in LA. They started like Minnesota or something. So, yeah, they did. I think they started in Minnesota. But we're going to get I think there's 3 teams they're adding to the NBA. I think we're going to get one of those. This is what we're going to be. Las Vegas will be one of only 16 cities to have an NFL team, a hockey team, an NBA team, and a Major League ball team. There's only 16 cities right now that have all that. We're going to be one of them.
And we may even get a soccer team.
We may get an MLS soccer team. Of course, we have the world champion Golden Knights. They're actually the best hockey team in the universe, in the entire solar system, okay, and in the universe as well. And the Aces, they're the women's NBA champion. We got them too. They're pretty good. We also have this. I'm going to read this stat here. Nevada has been the country's big winner when it comes to growing jobs, according to research from RealPage and the Bureau of Labor Statistics. In fact, Nevada grew its total employment base at the highest rate in the country in 2023, experienced 3.8% growth with a net addition of 57,700 jobs, according to data from Bureau of Labor Statistics. Now, Juana, 80% of Nevada is Las Vegas, because the rest of the states, it's just Reno, which is not very big.
We're not talking geographically, we're talking about population, but yes.
Yeah, Nevada's pretty empty except for Vegas.
Okay, it's not that empty, guys.
No, it's not that. There's cattle ranches and stuff up there. But the bottom line is 57,000 jobs in the state. There was 60 plus thousand of them were here. This is not going to stop. We have led for the last 4 years. We've led the nation job growth. Probably going to keep leading it, right?
Right.
Yeah. So lots of new jobs. People are coming here, and we're under building homes. This is like a long-term problem. If we don't build more houses, prices are just going to keep going up.
Right.
We're getting Californiaized from a California home price went up because they couldn't find more places to build, right? Because the mountains, you got a mountain or an ocean, or you're running into Mexico or something, so they had to stop.
And regulation,
taxation,
taxation,
and the cost. Home builders were saying, "Oh, we're going to build a house. We're going to charge more money." So
all
it's
kinds
super
of shunts,
expensive.
yes.
All kinds of fun things. Okay, next chart. This was really caught my attention. Properties with price increase. We are approaching levels that we have not seen in 2 years, but what surprises me, the meteoric increase of this. Juana, why would somebody put their house in the MLS and then at some point in the future take it out of the MLS and put it right back in at a higher price? Why do they do that? What causes that to happen?
Well, a lot of things.
Okay, give an example, because you see this every day.
I do see it all, and I have to admit, sometimes it's a head scratcher for me too.
Okay.
But so sometimes it's because things have changed, right? So sometimes the sellers have done improvements to the home. Sometimes things have changed as far as maybe the circumstances. So maybe they were in a hurry to sell, and maybe they priced it low, but then they decided that they're gonna that they have more time on their hands. So maybe they want to see if they can get more money. Maybe they got multiple offers. So all kinds of different reasons why prices increase. But usually it's because something has changed. It's not the same house with no changes that gets an increase. Something has changed. And like I said, sometimes because they've gotten multiple offers and they're like, wait a minute, maybe we just mispriced it and we just need to start again.
That's the most common one I think I've seen. The house comes in the MLS, they get a ton of offers. The sellers end up saying, hey, you know what? Let's reject all the offers and let's go back in the MLS with a higher price. There is this, I think people anchor to the initial list price. That's all they're focused on. Like, people have a really hard time determining what something's worth. People don't really know what anything's worth. So that's why like an agent will call us to say, how many offers do you have? They don't know what the house is worth. They want to know how many, like if I say we have 4 offers, they'll go back to their client and go, they have 4 offers. And then they're like, oh, it must be worth more than whatever the list price is, right?
Some people do that. Some people just don't want to play at that point. Some people say, well, I'm not going to compete with 4 offers, and let's go find something that doesn't have 4 offers.
Right. Yeah. Okay. I thought that was an interesting stat. Here's another interesting one. This is the market segments. Now, remember, we did this last week where we had over 100 properties disappear from the MLS, more than what came on. Well, the same thing this week. That inventory level's dropping. The number of homes were I think 40 or 50% less than we were even a couple years ago. Definitely pre-pandemic. We're way below pre-pandemic. Okay. You can see the very top quarter of the market, the most expensive homes, $1.45 million homes and above. 65 came on the market, but 65 were sold, right? What's cool was the second quarter, the next highest ones, 92 came on the market, 92 were sold. So those things the inventory hasn't changed in the last week, because for every one that comes on, one's being sold. So they're kind of going. But what's interesting is we go down to the bottom two. The third quarter, 132 were absorbed, only 127 came on the market. And then the bottom quarter, right? We have a listing down here that we just put under contract, down around that 389 number. Was it 6 offers? It was a bunch of offers.
We had a bunch of offers.
140 came on the market, but 167 were purchased. 27 more disappeared and came on the market. That's a pretty hot time. Days on the market's the median, so that means half. So it means half, but that 28 is still a quarter or a fifth of normal, right? 28 days is less than a month. The normal amount of median time on market is usually 5 months.
Right. The interesting thing that's happening right now is appraisals.
Talk about appraisals.
So, normally, you have so many properties and some appraise for the purchase price and some appraise for less. Great once in a while that they'll appraise for more, but generally either purchase price or less. Well, I'm not seeing I haven't seen one appraised for less in a very long time.
Right.
And I think that's really interesting. I think appraisers have kind of gotten wise to the fact that we have more demand than we have supply, and they're just making it happen. So even when the comps are not necessarily supportive of that, as far as the ones that have sold already, they're giving, if you will, that premium for the market condition. So I think that's an interesting thing. Appraisals always look back, while list prices always look forward, but appraisers have reached kind of this Zen moment where they're giving some credence to the lack of inventory and meeting those purchase prices. So I think that's an interesting dynamic, and it's a very rare dynamic.
What percentage of deals are you seeing that you think that are all cash that come across your desk and you look at the financing terms?
Well, so once you cross that $1 million mark, almost everything's cash.
That's kind of opposite what people. Okay, so the financing. Let's talk about this. This is interesting. The very bottom of the market, there's a lot of cash down there.
There's a lot of cash at the bottom, and it's basically all cash at the top.
All cash. So the person buying the $10 million house is not going to get a loan.
No.
Because they're an airline pilot and they make $600,000 a year. They're not getting a loan for that. Someone's got cash.
Right. So sometimes what they're doing is they're doing owner financing.
Okay.
So they'll do, for example, an interest-only loan it's a short-term loan. It's usually less than a year.
Okay. And this is so they can liquidate something else.
Exactly.
And move it over.
Right.
Okay.
Right. So they're, whatever their business is or whatever their investments are, they simply are trying to buy a little bit of time so that they have the time to liquidate whatever it is and then pay off that loan. So that they'll have an interest-only loan, and it's maybe for a year with a balloon payment at the end, and generally they'll pay it off well within that year.
Okay. What do you see the rest of the year? Do you see, we always thought inventory would increase substantially in the fall, which it tends to do. But after watching what happened last year, remember fall of 2023, we had less houses in the MLS than we had in the spring of 2023.
Right.
That almost never happens.
Mm-hmm.
We also had prices go up from the spring to the fall. Mm-hmm. That almost never happens. Prices always almost fall 2 or 3% from spring to the fall every single year.
Right.
And then they go up even more the next spring usually.
Right. So if we were living in a bubble, I would say that it would be a repeat of last year as far as prices going up and inventory going down. There is so much happening internationally, and then we have so much happening here at home with the election and everything else, that I think it's anybody's guess what's going to happen in the fall. If we're just looking at housing in general and saying, hey, look, there's not enough inventory, people still want to buy, and sellers generally don't want to sell in the fall, which is going to mean that we're going to, again, have diminished inventory, but the buyer demand will remain consistent because there simply hasn't been sufficient inventory, then it'll probably be a repeat of last year. But with what's happening internationally, even more than what's happening domestically, I think is really making it anybody's game. I still think that'll be a rerun of last year, but it could be different.
Okay. We already mentioned that there's people saving, that the home prices are going up faster than they can save.
Right.
Right. Okay. What about the people who are going to wait for interest rates to go back below 5%? Median price right now is about, call it $500,000.
Well, they're going to have a long wait, so we start there.
Okay, let's just say in 2 years,
yes,
rates go below 5%.
Yes.
2 years today, there are 4.99% people go, okay, that 5 was the magic number. I'm now going to go out there and start looking for a house. And I remember 2 years ago the houses were 500,000. Do you think they're more?
I definitely think that homes will be more 2 years from now than they are today.
Okay.
Again, it doesn't change the dynamic of supply and demand. Look, you guys, we don't have sufficient supply. We do have an outsized demand, and the lower interest rates go, the more demand you're going to have, not less, which again is going to push prices higher.
Yeah, I think so.
All right. So what do you think? Did we talk too much?
No.
Give us your real estate related comments. And we appreciate them. Remember to subscribe and hit notification bell, like the video, share the video. And if you're interested in buying or selling, please consider using our services. We would appreciate it. Please remember that we can also connect you with a great agent anywhere in the country. If Vegas is not your thing, we will help connect you with a great agent somewhere across the country. Like the video, subscribe, hit the notification bell, share the video. I know I said it before, but did you do it? And leave us your real estate comments.
Until you like and share the video, Juana will keep talking. And you'll never be able to move. There are people who just cannot move on until the video ends. They'll have to sit there until we are done talking. And they're like, God, okay, fine, I'll just share it and like the video.
All right, perfect. We'll see you on the next video.
Bye.